Let's bring in Mark Avallone, president of Potomac Wealth Advisors, with a lot more insight on all this. Mark, good morning. Thanks for being here.
Good to be here.
So you're overweight on growth and tech stocks. We just laid out the kind of the landscape right now. A lot of those big growthy names, the growthier names, I'm making up words, Mark, they've really been struggling a lot, especially since Omicron, when we really kind of thought those would be the stocks that would do well if the virus flared back up again. I mean, things like DocuSign, I've heard people like Josh Brown say, who's ever going to pick up a pen again? But they've really struggled. Are you still overweight with tech and growth? Are you shifting more to mega cap tech? How are you playing the tech?
Well, that's a great question. And there's a huge difference between cash flowing, proven tech that's a core part of our economy with great management and in some cases, multiple lines of business, and stocks that are built on hope and hype with mega outpriced valuations in an unproven business line or yet to be proven business line from a profitability standpoint. So I think you're going to continue to see this bifurcation between the two groups. Any rise in interest rates will exacerbate that and widen the gap. The lack of federal stimulus or the reduction in Fed stimulus in 2022 versus 2021 is going to put less money in people's pockets who are home and home gaming this market. So a confluence of events here are going to continue the chasm between unproven tech, which we're avoiding, and proven cash flowing tech, which has proven to be a winner.
So you also, you have some interesting comments in your notes recently. You call the Fed Chair Jerome powerful. And you say, while everybody expected the Fed to wind down its, its bond buying program, it's the way he did it and kind of the tone that he did it in is what really spooked the market. So I got to ask you, what can he say or how can he say something to give the markets confidence? And just in the current environment that we're seeing right now, do you see an interest rate hike in 2022 that would potentially, at least theoretically, hurt those growthy names?
Well, he has unequivocally been the most powerful force in this market, going back to the dark days of COVID and even before then, when he came out too tight on the markets and quickly capitulated. It was clear that he was pulling this market along with him. And I think that will continue. He will continue to give tea leaves for stock investors about where we go. And we saw that last week when, as you mentioned, he got a little tighter, he got a little hawkish. But at the end of the day, I don't see rate hikes in 2022. I know there's this groupthink about it, and they will have a taper, but there's a huge gap between a taper and a tightening. We're also in a global interest rate market, and there's still negative rates in Germany, near zero rates in Japan and elsewhere. So I don't think he's going to be able to raise rates as quickly as the market is fearing. I think net, the Fed's going to remain in accommodative, although a tightening mode. And I think that might not be so bad for stocks. It might look a little like what happened from the period of 2010 to 2016.
All right, Mark Avallone, we appreciate the insight as always. Thanks for being here.